there's a huge gap to overcome. And so I would absolutely underscore that affordability is going to be front and center for this year's housing market.
Hello, agentpreneurs, and welcome back to the Daily List Report. As you saw, we've got George Ratiu, Senior Economist at Realtor.com, back on the show today. You love his episodes, you love his updates on what's happening in the market, what might be happening in the future, and today is no different. Before we get started, as always, a quick reminder, Realtor.com/research, great place to go to get all of their updated reports and updated numbers. You can easily subscribe to get some of these things by email. So please go ahead, head over there and check that out. Of course, while you're here, please consider subscribing to this channel and clicking that little bell so you're notified of all future episodes. And of course, we're posting clips and tips on Instagram, so give me a follow there as well. And while you're at it, give Realtor.com a follow. There's a link right there below. Click on that and check out all the cool stuff that they have to offer. All right, without further ado, let's bring George back on the show. George, welcome back to the Daily List Report.
Thank you, Randy. It's, as always, a real pleasure to be with you and chat about the latest and greatest.
Absolutely. No, likewise. And as we were just discussing, your last appearance on the show just barely 3.5 weeks ago has been our best episode ever. So if any of you missed it, there's a link right there. Go ahead and click that and check that out. Great discussion about what we think might be happening this year and what the Biden administration in terms of their policies and how it might impact the housing market. But we're here to talk about today. So George, what's going on in the market? You just released your February reports. Let's give everyone a quick update and overview.
Absolutely. So the market in February, to really put it in context, I think has been unseasonably hot. And what do I mean by that? As most market participants know, winter generally, colder weather, people stay indoors more, tends to be a much slower time of the year, not as much buyer traffic, sellers take a step back and wait for spring. This year, because of the pandemic, and also in a way building on what we've seen the prior 2 years, buyers have stayed much more active during the winter months. Interestingly, the buying process is also taking longer, right? As we've discussed in prior episodes, tightness of inventory is making many buyers put multiple offers, many times unsuccessfully, which means they have to keep looking. So we're still seeing that in this month. We're seeing total inventory on Realtor.com drop over 50% compared to a year ago. New listings are down over 20% compared to years ago. And prices, not surprisingly, are rising over 14% higher than they were a year ago. And interestingly to me, we're now moving into the 7th month of consecutive double-digit price gains. So this tells me there's still a lot of demand in the market. The one parenthesis I'll put there is February. You may remember we had severe winter weather across a large section of the country, which brought a lot of snow, a lot of ice. And that showed up in some of the closed transaction data. New home sales were down compared to prior months, so were existing homes, still better than a year ago. The one other asterisk I'll put, is we're going to enter a strange period from a data standpoint. As we compare things to a year ago, the basically March, April, and May periods were the periods during the lockdown. A lot of market activity basically dropped off. And so comparisons to a year ago will become a little bit strained, especially if we're talking about long-term historical trends, which are not going to be very consistent.
George, let's touch on that for a second, because I think that's really important. I spend 20% of my day looking at data, looking at numbers and comparisons and all of that. And what you just said is really important, because we're basically now, almost exactly a year, right? Maybe just over a year into all of this. And that's when everything's sort of locked down and we didn't see that traditional sort of spring rise in inventory and activity. And so now as a result, as an economist, what do you do? And as a real estate agent, what do you do when you're looking at these numbers and you're like, it's down 50%, it's up this, because now it's skewed as a result. So how should our agents process this information?
Well, that's a great question. In a way, it's worthwhile looking at how we're doing compared to a year ago, because that, in a sense, represents an extreme case scenario. At the same time, given that we're expecting the market to slowly return towards a more normal seasonal pattern, I think it's worth looking at the prior years to the pandemic. So take, for example, 2017,
Mm-hmm.
2018, 2019. Look at what happened during those seasons, particularly for the spring and summer months, and get a much better sense about how this year might compare to those. Because ultimately, like I said, the pandemic was such a unique period, right? It wasn't really a market-driven downturn, right? It was a government-mandated lockdown,
Right.
which drove both the economy and the market into a severe downturn. So comparing normal, quote unquote, with that is not exactly sort of looking at apples to apples. So I think it's worth looking at the pre-pandemic period, see how the seasonal trends there played out, and then looking at how this year compares to both, right? We want to make sure we're in a much healthier range than we were a year ago. So if we don't see really strong year over year comparisons, yeah, we might worry. But at the same time, if the year over year comparisons are so dramatic that your eyes start popping, then it might be worth looking at the prior 3 years because you're going to get a much better baseline.
So, George, I think the big question, obviously, is inventory, right? So, right now we've got a bunch of agents walking and they're like, yeah, George, I get it, whatever, right? There's no inventory. Is that going to change? Like, what's happening on the inventory front are the vaccines and that rollout. We're now dosing 2 million-ish people per day, right? So that's growing and accelerating. Are these going to free up inventory? Like, what's going on the inventory side? Is there any end in sight to that?
That is really the $6 trillion question,
That's
right?
right.
And it's
$6 trillion.
that's right. Is what is going to get sellers, number one, to come off the sidelines and list their properties, and two, what is going to take to actually bump up new home construction to levels that they will start to meaningfully provide a much broader alternative to the inventory shortage we have right now. So let's start with the first one. To your point, right? Agents are clearly saying, listen, you give me a home, I'll have it sold in probably a day or two, just
Mm-hmm.
about anywhere in the country. So it's a clear sign that for sellers, this situation is not any easier. Number one, you're right. I think that restoring confidence in the health front is paramount. The fact that vaccinations are proceeding apace, the fact that the number of cases is declining, I think as these will show an improved health landscape, business activity will pick up. But even as that does, we're still left with a very important conundrum. Namely, most sellers are also buyers, right? So for them to put their homes on the market, they have to have generally their next trade up home or
That's right.
retirement home, whatever it is, ready to go, right? And then most people do that. They'll put an offer on their next home, make it contingent on the sale of their existing home, and they're trying to negotiate that 4 week, 5, 6 week period, trying to juggle two homes. Right now, for most trade up buyers or even retirement buyers, the options are slim. And as the joke goes, to none, and none just left town, right? And so the trick here is a very complex one. And what do I mean by that? If we could agree, theoretically or hypothetically, to have millions of sellers who are ready to make a move, to all list their homes within a 2 week span, in a way, we could actually have options for those sellers who are ready to move and buy their next home because other sellers would provide that. And at the same time, they would free up their homes for the first time buyers, trade up buyers, and so on. But markets rarely work in that way. So I think in reality, what we're going to see is more of a trickle effect, especially as we move into probably May. I expect to see a pickup during April. I expect to see more sellers as business activity picks up, bring homes to market. But I don't expect to see a significant ramp up until probably closer to May and June, as we expect those COVID cases to drop even more so.
Is that also just sort of this kind of great confluence of events, right? Where the vaccine rollout is going to be pretty deep by then, hopefully. It is spring. You're coming into the summer months when people might want to move and, not have to deal with school changes and things like that. So is this sort of perfect storm in a good way of things maybe headed our way in sort of that May, June timeframe, and maybe we'll see some relief in terms of inventory?
I would say that we are certainly seeing signs of that perfect storm. If anything, the vaccine rollout has been accelerated on the plus side, right? The timeline we expected to achieve at least immunity across the country is now pushed towards May. It used to be June, July period, possibly September. That's
right.
moved up. At the same time, we're seeing the number of cases drop stronger, and we're seeing states make moves to open business activity on a broader scale. All of those to me signal that we're making moves in the right direction. At the same time, as you and I know, and as probably most of our listeners know, just by being in the social circles, so many of us are ready to travel, are ready to go out and actually eat, are ready to go see each other. So I think there's tremendous energy ready to be unleashed. For housing, I think that energy will translate into strong activity during the summer. And as we saw this last year, even with the quarantine, we ended up with a very solid, strong summer. It actually ended up being extended into September and October. So I think there's potential this year to see a lot of turnover and activity in those June, July, August months. To your point, school activity and the school calendar drives a lot of the transactions in real estate for many families with children. So I expect summer will be a much busier than usual season as people will try to squeeze those much needed vacations with trying to finalize and make plans for their next home.
Yeah, absolutely. And look, George, we're not doing our job if we're not also talking about, the fact that COVID cases actually in a lot of states are starting to rise again, right? So we've seen a precipitous drop, and now we're seeing some growth there. And, it's a bit of a race, right? That's why we want to get the vaccinations out and we want to get that level of immunity. But there is this underlying unknown, I think, that still does exist, and we should at least acknowledge that.
I'm so glad you brought it up. I mean, to be honest, we would be remiss not to mention downside risks that are currently, in a sense, baked into the outlook. Let's consider the fact that, broadly speaking, the Federal Reserve at their last meeting just recently looked at the outlook. They upgraded their outlook for the economy. Yet at the same time, when you look at their monetary steps, they remain committed to basically quantitative easing. They maintain the rate at this unchanged, right? The zero lower bound. They are committed to purchasing treasuries at the same volume, mortgage-backed securities at the same volume they were before. So it's obvious in their actions that they still see a lot of downside concerns for the economy. And I think for real estate, similarly, when you look at the February numbers for existing and new home sales, we saw declines from the prior month. Yes, I think February had something to do with it. But at the same time, as you and your listeners know, it's hard to sell a product that's not there, one. Two, it's hard to sell a product that's not there. And when it becomes available, it's priced a lot higher than it was a month ago or a year ago. And so right now, I think we are very much contending with this potential risk for housing in this year. Number one, mortgage rates are moving higher. Yes, they are still really affordable by historical standards. But think about that. Many of today's first-time buyers have grown up, right? They are young, they are mid-20s, have grown up in an environment in which rates have been really under 5% practically for the better part of a decade. So when they go from 2.6 to 3.9, 3.10, that's a huge jump from their standpoint. So you have the psychological hurdle to overcome. And then you have the financial one, right? With credit underwriting still tight, move in mortgage rates simply end up costing the typical buyer more per month. And right now we're at least at $70 higher than we were a year ago on a monthly payment for a medium priced home. So these are already adding some headwinds for many first-time buyers. And those are the ones who are likely to drive a lot of this year's market as well.
Absolutely. George, thank you for that. That's really helpful. So we've kind of caught up on the state of the state. We understand that there's a massive shortage of inventory. There is this imbalance in the market. maybe there's some, signs of life coming here, so to speak, in the kind of the May-June timeframe. Last topic I want to touch on quickly, and I think you just started to touch on it, is just affordability, right? People are looking at these home prices. You said, correct me if I'm wrong, 14%, up 14% year over year, median home price, and that's massive, right? Rates are starting to climb up. And I look around, where I live in Southern California, and I was just like, man, how can anybody afford a home? Like first-time home buyers, I don't even know how you would do it. And so I just want to talk about that. And there was a number, and please forgive me, George, I'm going to mess up this number. I don't even know it. You might, at the current median home price, there's frankly a lot of Americans who simply can't afford a home. Is that correct?
Well, when you look at the state of finances, look at the fact that 20 million Americans, roughly, a little bit low, but it's declining, thankfully, but are still roughly dependent on unemployment insurance. The truth is, absolutely, at over $350,000, what's the median, price of a listed home on Realtor.com, this is a really steep price for many Americans. The pandemic and the recession didn't do many of us any favors.
Yeah.
And in fact, when you look at incomes have not really risen at the same rate that home prices have. I mean, you look at the fact that for most of us, those who are unemployed have seen obviously no pay raise. And for those who are still employed, many times the pay raise generally tends to keep up with the rate of inflation. So in the 2 to 3% window, right? And so when you compare that 2 to 3% with the 14, 15%, we've had some months, and weeks where it was that high, there's a huge gap to overcome. And so I would absolutely underscore that affordability is going to be front and center for this year's housing market for many, many Americans. Because when you don't have enough homes, obviously, and demand is as strong as it's been, inherently in the market mechanism, prices are going to adjust.
Yeah.
And as I mentioned earlier, right now, one of the main ways to actually ease that is through new construction. And we probably, discussed this in prior episodes. Think back at the last time we had such a massive demographic wave. We had new homes at every price range. Now we have the largest demographic wave in the history of this country. And we really have new homes mostly at the premium and upper end of the market. Not as much at affordable, not as much in workforce housing. And to me, this is a tremendous opportunity in a way to remedy this market shortcoming. But of course, when you talk to builders, rightfully so, they say, listen, it costs a lot more in materials.
Yep.
It costs a lot more to purchase land because of the current market conditions. And we're still struggling to attract enough workers to put a dent in it. So to me, I say this particular segment of the market and this time in history, we are probably just as much in need of some technological solution to the way we build homes that can lower that barrier, the cost barrier and the barrier to entry. I wish I had a clearer answer to that, right? I might change my line of business if I did, but
yeah, right.
That's right. But the point is, I think that there's a clear need for additional supply, obviously on the existing, but just as much on the new side.
Absolutely. No, well said. And I think I'm going to do an episode in the near future here talking about some of those new technologies, right? 3D printed homes and these homes in a box, so to speak, tiny homes, whatever, right? There's a lot of interesting stuff that's going on. George, thank you so much for coming back on today. Is there anything I missed? Any big points that we didn't cover today?
Not any from my standpoint. I think that the markets as we see them today are still in that stage of trying to regain their footing. And so that's one thing we'll keep an eye as we go forward in the next few months, especially as spring takes hold and hopefully we'll see more green shoots coming up.
I couldn't agree more. We've all got our fingers crossed for that. Absolutely. George, thank you as always for your time and for coming back on the show.
Absolutely. Always a pleasure chatting with you, Randy.
We'll talk to you soon, George. Thanks. All right. Well, there you have it. Love having George on the show. Look, he's a regular. He's going to be back every month. We're going to talk about this. So make sure you watch these episodes. Make sure you stay up to date in terms of what's happening in the market because there's a lot of things that impact it, as George talked about today. we've all got our fingers crossed for a really good spring here, and hopefully coming into the summer, some more inventory, which is going to be good, I think, frankly, for everybody. That's it for today. Until tomorrow, be safe, be healthy, be happy. We'll see you soon. Bye.